Hi guys. So today's topic is how to get ready for divorce. And one way to get ready for divorce is to start gathering all the documents necessary to divide all assets. The biggest saver in a divorce situation is if spouses have accounts jointly, or one spouse was managing their finances and it's my spouse, so I don't have to do discovery. A lot of money goes into discovery and acquiring documents through, not directly from the other side because they can't provide all of it for whatever reason, they cannot print it out or they're missing statements, but because we have to do subpoenas. And if you have these documents, which would mean bank records, bank records are needed because when we calculate how much was accumulated during the marriage, we look at the date of marriage and date of separation. And so let's say your marriage was 4 years from the date of marriage until the date of separation. If I look at it this way, how would I know how much money did you have at the date of marriage and how much at the date of separation? So I would need bank records 5 years, so a year before the date of marriage, and then up until present, so I can calculate the money accumulated during the marriage. And then it becomes even more interesting when one spouse claims separate property claims. So if, for example, one spouse said, I had $100,000 in my bank account that I put down into our joint house, and according to Family Code Section 2640, it is considered separate property claim, dollar for dollar, without interest, then that spouse who contributed $100,000 is entitled to reimbursement. So how would I know? I would trace the bank records. So I would see, okay, before date of marriage, that spouse had $100,000 in that account, and that money was transferred from that account into escrow account, and therefore that money is traceable back. Otherwise, the court would have to rely on a testimony of that spouse. Now, think about the fact that sometimes the banks, I know for a fact, Wells Fargo and Chase, for example, they don't hold bank accounts more than 7 years. So if you contributed a lot of money into the marriage, of course you're not thinking about divorce, but it's good to have your records. It's good to have bank records that you don't know if banks are going to keep or some law changes. It's good to have a hard copy. It's good to have some backup copy. So being prepared for divorce financially, having everything ready, will save you thousands of dollars. And I know there are a bunch of online services for divorce, but this is very important because nobody can do it without these documents. And how I usually don't calculate the amount of community property accumulated. So what I do, I hire a forensic accountant, CPA, who is pure focus not on taxes, but on family law related cases. So they download these bank statements into their software, and it generates actually a spreadsheet. It's really amazing. So we don't have to go through. And then starting with the date of separation. My suggestion to my clients is to open, because after date of separation, whatever you earn is considered your separate property money, meaning it's not subject to 50-50 split. So whatever I make after date of separation, I suggest to a client to put into a separate account. And then the usual response is, but I already have my separate account without the other spouse's name. Yes, and wrong, because even though you have that separate account, because during the marriage, the salary you put into that account is considered community money, even though it's in your name or your spouse's. If your spouse puts their salary in their account, it's still community property. It's also about the debt, the same thing. Debt accumulated during the marriage in one spouse's name is also considered community property debt. So why opening a new account? Because it's fresh money. So after date of separation, fresh income comes in, and that income is separate property income. So what to spend separate property income to avoid accounting nightmare? Logically, separate property spent on separate property. What is separate property? On yourself, on your food, your rent. If you're living in community property apartment, still your rent. If you live in community property owned house, mortgage, still your separate property responsibility. So, and then what do you use community property accounts for? Joint expenses. It could be children's school, extracurricular activities, joint credit card debt. Again, joint credit card debt means credit card debt accrued in your name or in your spouse's name during the marriage. So, step number 1, how to prepare for divorce is get your finances in order. Step number 2, depending on how complex your divorce is, it is very important to get choosing your right team. And team includes an accountant who only focuses on divorce. People tend to say, oh, I have my CPA, oh, I have my accountant in in Philippines or in India. No, you want someone who can be your expert witness. You want someone who doesn't say, I'm unavailable in the months of April and October because I'm doing my taxes. No, this person has to primarily focus on what you need. And they have to be reliable. They have to have a history of being a good expert. So it doesn't mean it has to be, super duper complicated. It could be a simple, for example, what do they usually do? They calculate asset split, a debt. So they create a spreadsheet of assets and debt. Then if you have stocks, they do Nelson calculation. So they calculate based on vesting schedule who gets how much share when. They do long-term spousal support analysis, which is when spouses are married, let's say for 5 years, short-term marriage, but the divorce was only 1 year. So the 4 years post-divorce, it's called long permanent spousal support. And in that permanent spousal support, the spouse is only entitled to the level of standard of living during the marriage. And in order to determine that, the accountant looks at taxes, 3 to 5 years taxes leading up to the date of separation. And that taxes and spending habits and living adjustment will help to assess how much the other spouse is entitled to spousal support. They do business evaluations, but that's usually already, that's rare. So I listed what forensic accountant would do most of the time. Then, because sometimes there are specialties in business evaluation. Then the second level is to get your lawyer. I created a bunch of videos on my YouTube how to find a great lawyer. So to summarize this lawyer has to be, if I were to choose a lawyer, I would choose a family law specialist like me, someone who reached the highest level. It tells you a little bit about lawyer's ambition too. So I'm not saying that lawyers who don't have specialization, that they're bad lawyers. It just tells you the level of their drive to reach the level of education, and also they have to prove that they have to get 5 professionals like judges and lawyers to endorse them. They have to have many hours of trial experience. So getting that is not just a piece of paper. It's actually a commitment. It's an exam, 1-day exam, and all of these things. So first, family law specialist. Second, I would pick a lawyer who practices in that environment, who knows the judges a little bit and knows other lawyers. You don't want to pick a lawyer when you're in Monterey from San Francisco. A lot of clients call me and want me to practice in Monterey, in Santa Cruz. It's it's a different environment. I wouldn't recommend. I could do that because I can practice law in California, but I don't think it's a good idea to go and not know your judge, not know your opponent, not know the tactics and these little intricacies of litigation. So choosing your team wisely, locally, professionally. Of course, I'm looking at social media reviews. I have 200 videos on YouTube. So when someone is choosing me, I'm assuming they already did their homework and they know they would feel comfortable with me versus, someone you never seen before. They have no social media exposure, nothing. So that's accountant, lawyer, and professional therapist. Doesn't have to be PhD in neuropsychology, just a good professional therapist that I would choose in the same token as I would choose a lawyer. Look at reviews, look at professional achievements. And the reason it's important to have someone like that is I notice that clients use my services, which are higher paid than therapists, for therapy purposes. And that's why I tell them I'm focusing on money and you do your emotional balance with someone who is equipped to do that. So in order to prepare for divorce, we have to get our finances in order and we have to get our team in order. These 2 steps are going to save you a lot of sanity and a lot of money.